Greetings, everyone. First, I'd like to thank Tanya and Traders Talk Live for the opportunity to speak to all of you today. It's with my great honor and pleasure to share my trading information. So without further ado, let's jump in and begin. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the creator of a one-of-a-kind custom software called the Market Price Anticipator Premium Edition 3 software. We're a unique firm in that I'm not only the creator of the software, I'm the trader, and I've been trading the software for many years, and I'm also the educator instructor. Brief bio, I've been a professional trader for over 20 plus years. I'm considered a technical analysis expert. As I mentioned, I'm the creator of a one-of-a-kind, state-of-the-art custom trading software. We founded GPA Trading Services 8 years ago in the year 2010. I've educated thousands of students over the past 10 plus years, conducted numerous live events, speaking engagements, platinum program where we had meetings worldwide, live events, one-on-one coaching and mentorships. Basically, we've seen it all and done it all. If you haven't had an opportunity to peruse our website, this is GPA Trading Services. You can see I'm in the center of this page, and this is the trading station in which I trade from every day, multiple monitors covering multiple charts and multiple financial markets. Today's topic is going to be how to master the markets utilizing the all-encompassing state-of-the-art MPA PE3 software. Brief disclaimer. Everyone is familiar with these disclaimers, so I won't read it word for word, but I will take a moment to highlight a couple of points. First, trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose and that fits within their overall financial plan as developed by a qualified financial planner. We have very specific rules, including never risking more than 2% of your entire account balance on any one given trade. For options traders, we recommend you risk no more than 5% of your entire account balance on any one given option trade. And most importantly, always adhere to strict proper money management. Finally, all information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy and sell any specific investment. Basically, you're going to be trading at your own risk. Now, key components in mastering the markets. Very important we understand support and resistance. Very important to know the trend direction and the momentum of that direction. Also, aligning multiple time frames. And when you align multiple time frames is great, but the key is when you align them within the MPA PE3 cycles, and we'll get to that in a moment. And finally, understanding how the lower time frames cycle within the higher time frame, and we like to refer to that as called the line of progression. Now, just a quick example from a screenshot of what we mean by aligning time frames. You'll notice here we have a monthly time frame. You'll notice the little etching here gives the stock you're on, in this case oil, the month, the price, etc. All that's for ease and recognition. But you'll notice here the trend momentum and the PAI, our two indicators, are in overbought conditions. The weekly's in similar situation, overbought. This is what we mean by aligning the time frames. And notice even from the monthly to the weekly to the daily, it's the same screenshot, different time frame, but the prognosis is the same. Oil prices were projected to go lower because we had the topping and rolling of a daily, a weekly, and a monthly. Now, what do we mean by following the line of progression? You align the time frames, then you need to understand how you follow that line of progression as the time frames will continue to cycle. In this example, again, it's another picture or a screenshot of oil back when the monthly, the weekly, the daily were all topping and rolling. Notice on the daily, we had a top and reversal as well. And as it started to move lower, our daily did very specific behavior that we call line of progression. The daily is expected to continue to stair step lower because it's going in the direction of the higher weekly and monthly time frame. And we call this phenomenon of stair-stepping slingshotting. That's a term we use that we'll frequently hear. And notice each one of these little boxes is where the daily slingshotted lower and lower and lower, just repeating over and over. Well, you can anticipate a market to do this in advance based on the direction of the higher time frame trends. So here's another example looking at a currency pair. We trade all markets, so we'll have a little bit of sample of everything. Here we can see the monthly had started to bottom in reverse, and we had a weekly that started to bottom in reverse. The daily started to hook and cross. You'll hear a lot of this hook and cross pattern. We'll show you in a moment where the PAI hooks and the trend momentum crosses, but it's based on the alignment of the time frame. So we expected the pound dollar would do exactly what it did. Not only is price going to start moving higher because all the time frames are moving up, but notice the 4 hour. We talk about the line of progression. The 4 hour move from oversold to overbought, and once it got there, we expected this behavior before it even happened, that it would turn over and slingshot higher and higher and higher. And that's what's illustrated by these last three. The 4 hour slingshotted higher in the direction of the daily. And then once the daily gets in overbought territory, a future picture of this would be the daily would turn over, start slingshotting higher because it's going up in the weekly. Eventually the weekly will start slingshotting higher because the monthly is up. Okay, and this is based on multiple time frame analysis. So what we decided to do is that we had something wonderful in that we aligned the time frame. And here's one for gold, same scenario. The monthly starting to depressurize, the weekly starting to depressurize, the daily went from overbought toward oversold, and then the 4 hour started in this overbought territory. Expected it to slingshot lower first, up and until the daily started to reverse. Then we went not only the quick short trade, but then we went long based on the cycle. So you notice we anticipated that move in advance. So let's go to the charts and I'll show you what we mean by anticipating in advance. In here, everyone loves the S&P. Well, notice we have a plethora of what we call templates, and it's for the convenience of the traders, depending on what type of trader you are and what you like about indicators or lack thereof. We have a plethora of tools in which to use. Notice how the monthly is turning over. We got the hook and cross pattern on the monthly. Well, that tells me this little hook and cross pattern here and here, it started to hook first and the trend momentum's crossed. That's the hook and cross. Notice we give a trigger. So if you're a visual person and you say, well, when do I go short? Is this turning and hooking now? Can I go? Or do you see a trigger? Well, either way, you can go when the trigger fires or you can go when you see it hook. But you get the hook and the cross with the trigger, it is a done deal. So the weekly gave us a trigger as well. From the monthly to the weekly, we had triggers. So we had multiple time frames aligning, which is clearly illustrated by the trend momentum and the PAI being overbought. And as the previous presenter mentioned, we're talking about some S&P trades. We trade the S&Ps all the time, both up and down due to the cycles. And I told our students the S&P will definitely continue to travel higher because I think the cycle is going to continue further as it goes to 3,000 and above, but we're stuck in what I called a multi-month correction. I still think we have some unfinished business to the downside on the S&P. And why is that? That's just based simply on looking at a monthly that has a trend momentum PAI down, hook cross pattern, if you will, down. And that tells me we have a ways to go before the weekly finishes, then reverses back towards overbought, which in turn will force the monthly to slingshot higher. So I expect to see the S&P make new highs again, yes, and move on to that 3,000 plus mark before the big Elizabeth, I'm coming to join you, honey, and the markets crash. Our market will crash, it's inevitable. It's just a matter of when, not if. So this is a software that gives you a gauge that tells you when I should be taking profits via the profit triggers, when I should think about reversing positions via triggers going short or triggers going long, and based on the alignment of the time frames. So instead of having to go each time frame and say, well, this is monthly, and let me look at the weekly, let me look at the daily, let me look at the 4 hour, we set up automatically through our programming that once you get a hook and cross pattern, that means the lower time frames are in agreement. And when you get a hook and cross pattern to the downside, the time frames are in alignment. When you get our slingshots, this phenomenon of slingshotting higher and higher, wouldn't this have been a great tool to have ever since the S&P tanked out at 665 value way back after the market crash? And you could have been in this just simply buying slingshots for years, and you would be able to ride this. Well, ladies and gentlemen, we're expecting and anticipating. We don't predict, we anticipate. So we anticipate this will slingshot higher once the weekly finishes its down cycle. And the weekly's not quite finished the down cycle. So like before, it tried to engage up and then failed and is trying to do it again. I suspect this will fail again, finish the cycle, and look for those reversal points. Once the daily starts to reverse again, you can look for scalping purposes. So we tell our students that if you're a scalper, then all you got to do is go to the lower time frames and you could set up the same information with triggers to go short, triggers to go long, either buying the hooks, buying the crosses, and or selling these slingshots. Well, notice that's just the S&P. We have numerous trades that are ongoing in currency market. Notice the same principle. It's all about aligning the time frames and getting in. We're up over 2,000 plus pips on the pound odd, and it is projected to go much higher in the months to come. And why is that? The weekly's exhibiting the behavior it's supposed to when you have a monthly time frame that is up. We still have the trend momentum of PAI up on the monthly. The prognosis is, or the bias is, this will continue to push higher for months to come. And then eventually we'll get some movement much higher, thousands of pips higher. But if those of you that saw me present months and months ago, I mentioned this trade and I said this is going to be a very profitable trade because the time frames were aligned. It's an highest probability outcome. And as you can see, it went on to 2,000 plus pips. Pound CAD was another one I mentioned to everyone that were up over 1,131 pips. And it was expected move because of the time frames aligning. And this is just down to the 4 hour. But the reason we got in the trade, as we were watching this reversal, we had a nice pullback. And once it slingshotted higher, we bought in right there and allowed this price to go on up 1,131 pips. You'll notice on screen is our trade management system. So whether you like to have a trade management system manage the trade from start to finish, we have that available for you. Well, what's unique about this is every one of our methodologies is incorporated into our tools. So what does that mean? That means the hook and cross pattern, the triggers, the slingshots we discussed, all that's built into these trade management system. So I can tell it to buy a dip in an uptrend, or I can tell it to sell the rally in a downtrend. And if you ask yourself, you notice how price always stair steps? No matter what. Some people call that the ebb and flow of the market. Well, it's due to the time frame cycling is that ebb and flow. And it gives you a nice graph or a gauge in which to use these time frame cycles. So that's why we call them slingshots and hooks, triggers, etc. It's very simple and easy to use because we did all the work for you. It aligns the time frames automatically. It shows you based on hook and cross pattern. It shows you based on triggers if you want to use the triggers, and everything is there at your fingertips, and it's 100% completely customizable. So during this period of the pound CAD is a trend reversal. Yes, it's in a major trend reversal that's lasting months and it has months to go. I was very confident based on the alignment months ago. I'm still confident. Why? Notice this weekly, for example. It went from oversold to overbought, then it turned over and slingshotted higher several times, including forming another one that's about to slingshot higher again. And that is because that is the behavior you expect when a monthly trend momentum and PAI are up. Well, we have such magical discoveries with the software and the programming that we also customize it to fit with a Fibonacci retracement zone. And as I was telling our customers and students, as we were about to have this reversal, you need to get in, but it also ties in with a Fibonacci sweet spot. It will retrace at least to the sweet spot area just because of the hook and cross pattern. Highest probability. The only way it doesn't reach your target is for this to slingshot against you. But the best news is I'm watching it. So if it starts to turn against me, I can take profits. I can do something with it, as opposed to not knowing when it's going to turn and reverse. The time frames have to cycle, and when they do, you'll notice it's going to start to pull back. Well, ladies and gentlemen, I do expect this to go up thousands of more pips. We're at 1100, and no, this is not the end. It will go higher, but we're in the midst of a correction, just like the S&P. My weekly starting to turn over, and yes, we expect it will slingshot higher because it's done it before, and the monthly is still up. So the bias is when this cycle finishes down, we're going to buy the pound CAD and continue to let this run not only in this trade, but scale in multiple more times as it rallies over the next several months. Whether you're talking stocks, Amgen. Well, why did Amgen go down a couple of days and all of a sudden start to reverse today? I could have made some money off of that trade if I was an options trader. Well, we got a 4-hour slingshot up. Pretty simple. We see it coming. We know the cycle is unfolding. And why is the 4-hour engaging up? Notice the alignment. When it starts to hook for an engaged slingshot, or a hook from being oversold, hooking up, or overbought, hooking down, it tells me the time frames are aligned just based on that hook. So notice as I put this little red line to call your attention, as the 4-hour started to engage up, it means what? My lower time frames are in agreement. So watch what happens when we go to a 1-hour. It's telling me the 1-hour is oversold and about to start turning up. And as this price finally finished, we'll tell you when it looks like that. You say, okay, what do you do intraday? You buy the 1-hour hook and you enter the trade. Well, Amgen went from a low of 171 to a high so far 176, almost 177, 176.92. So you're talking about a $5 move. Options traders, can you make a trade on a $175 stock that moves $5? Well, if you don't know, the answer would be a resounding yes. You don't need it to move 10, 20, 30, 50, $100 in order to make any money using options. And that's what we use with our gauges based on the hook and cross pattern. Gold. I think gold's in a similar pattern. Yes, it's been correcting up, but notice gold's monthly is turning over. I think gold has a little further to go as the weekly's turning over, continuing to push lower. And I think gold, hint, 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 is going to make a move and start declining in a stair-step fashion, not just straight down, but in a stair-stepping fashion towards 1300, 1307, 1302, and revisit the previous lows. So the bias is gold will continue to decline as the daily, the weekly, and the monthly are turning down. So that's how we trade it. We trade it intraday. If you're a day trader or a position trader, we align the time frames to let everyone know this trade will last for months and how to scale in. Or if this is just an intermediate short term or even a day trade, you can use the hook and cross pattern or the triggers. And this would tell us that yes, gold's going to go lower. My daily says so, my weekly says so, and my monthly says so. So with that in mind, look for gold to start to stair step lower back towards that 1307, 1300 range. Let's switch gears and mix to some other trades we have going on. Here's Amazon. Amazon starting to top and roll on a 4-hour, and we knew we expected this to bounce, but notice that little formula I mentioned. Whenever I have a swing point high to a swing point low, we can run off of that based on the last time this indicators were overbought, was up at that high. And when they finally turned and reversed, we knew we were due for a Fibonacci style retracement, a 38, a 50, and a 61.8. Well, this went on beyond, beyond at least that retracement, but that's because the daily started to get involved. And the daily started that reversal process. Notice Amgen is about to start reversing, going back down. The daily is finishing this process of its up move and should start to turn over in the next several days. I think Amazon's going to be pulling back as well, like the S&P and the Dow are expected to as well. Now, moving in there, some of the hottest topics going is Bitcoin. Those of you that saw me present even as early as a couple of weeks ago or last week, can see that I mentioned Bitcoin was about to reverse and start moving back towards 11,000. We had a hook and cross pattern on the daily, which was where you were to enter. And now notice the weekly. Right here, it's hooking and crossing, up, up. The alignment of these two are simple. It's just to get them in the same direction. And when they're oversold, it's a good time to go long. And when they're overbought, it's a good time to go short when they're aligned together. So we did all the homework for you. Instead of having to go every time frame and see when the alignment is there, again, this daily wouldn't have hooked if the 4-hour wasn't reversing. And notice I'll draw my little line for viewing pleasure. And as the daily started to hook and cross, we saw that early on as it started to hook and cross, that the 4-hour, this little hook and cross pattern has a lot of meaning. When it hooks and you get a slope and a cross like this, it means the lower time frame will cycle towards overbought. So notice as my daily started to hook and I had a cross to the right of this line, notice what my 4-hour did. My 4-hour went from this oversold area and managed to move into overbought territory, including slingshotting higher and higher the last several times as expected. Well, again, why is Bitcoin expected to slingshot higher? Because the daily is up and the weekly is turning up. Pretty simple. We got a daily up because the weekly's turning up. And now that the weekly's giving us a hook and cross pattern, this is insight that this daily will continue to move towards overbought as it's been doing and continue to do so. So notice, no matter what price does, in order for price to move lower, it must slingshot lower. In order for it to move higher, it must slingshot higher. Well, this is a daily time frame. Well, notice what happened to the 4-hour. The 4-hour did exactly that. It went from oversold to overbought, then slingshotted higher, higher, higher as expected. And we track this for you as the software does as well. So that alignment is great. Now that it's so easy to know when it's aligned, I just got to use a trigger to go long or a trigger to go short, or I can use my hook and cross pattern either way. And I have high probability outcomes. And the best news is as you're making these retracements, so I'm going to switch gears and show you some more live trades we have ongoing. This is what we call our market scanner. This is a state-of-the-art market scanner that's completely customizable. All of this information tells me everything I need to know at a glance. It tells me the direction of the trend, what triggers are firing, whether it's up or down, what slingshots are forming, what positions. We include support and resistance, built-in support and resistance. So those of you who say, well, I'm not sure if that's the major support or not, or major resistance, it'll all be included in the scanner for you based on the software showing where support and resistance are. And it tells you the cycles, where in the cycle, like this dollar Swiss, we can see green arrows up. So guess what? The dollar Swiss is moving higher today. Wow. And it will start to see as it starts to turn and the cycles are starting, you'll notice as a cycle, some are up, some turn down. That's just based on the cycle. So this scanner does exactly what a chart does for us. We're looking at a chart to see when the time frames are cycling. Remember the job from the two trade indicator is to move from oversold to overbought, overbought back to oversold. And notice the only time it can stay in overbought territories with slingshots, and the only time it can stay in prolonged periods in oversold is with slingshotting lower. But this is an easy to use, very simple to follow system that has been accurate and continues to be accurate years and years and years later. Why? Because it takes into consideration the multiple time frames, the ebb and flow of the market. We're so high tech that we include money flow into this. When money starts flowing, greater buys than sells, it's into this indicator. It's also got a volume indicator. All sorts of things are built in the background that aligns these time frames. So whether you're talking smaller time frame trades, and here's a pound CAD. Those of you that saw me present just a couple of days ago, I mentioned everyone needed to get into the dollar CAD because it was reversing and going higher. We're up 232 pips. Well, those of you keeping score, depending on what type of trading account you have, we're up over $7,700, almost $7,800 on 2 trades we took in the last several days, a couple of these in the last few days. So notice, it's all about the cycles. It's all about the time frames aligning. For your convenience, like I mentioned, we have multiple templates, whether you like a lot of indicators on a chart or you like them very simple. Here's the one with the Ichimoku, and there's the pound odd. Here's this one that has built-in support and resistance levels for you. Crude, again, whether you want the triggers or not, you can make it as simple or as more involved as like. So some people like soup to nuts on their chart. Some people like minimal things on the chart. We have something for everyone, and it all ties into the basis of our reversal, time frames aligning, using the hook and cross pattern alignment of the time frames. We also have a scanner we use called the Slice of Heaven Finder. This too is one that I use to get in these large trades. The pound CAD, we showed you over 1,100, 1,200 pips, and the pound odd, which is over 2,000 plus pips. Those were both found using the Slice of Heaven Finder. You set the time frame you're interested in, and it tells you what time frames, where they are in their cycles, and gives you insight to when you should be going long or short based on those cycles and where they are. So if you're a position or investment trader, you would change the time frames from here to go to the monthly. And it's very simple. By using the Expert Advisor, you're able to input the customizable. This is on a 4-hour. There's a drop down that simply lets you jump in and change it to a monthly, weekly, daily, or if you're a scalper, to do the lowest of time frame. So this will be for everyone as far as all types of traders. The great news we found out is this software works on all time frames, and it works in all markets, whether it's stocks, futures, commodities, ETFs, bonds, etc. Speaking of bonds, I know a lot of people like to trade bonds. And notice the 30-year bond. We've been pegging bond movement over and over, and simply, why are we expecting this to continue to stair step lower? It's based on a monthly. The monthly's moving down, and yes, it's oversold, and we will get a little depressurization, but the expected move is to slingshot lower and lower towards this long-term target of 126, basically this previous low that we have an A, B, C, D extension pattern. And notice the A, the B, the C is easily traded with, we started the A turn when we hooked and crossed, we started the B end at the end of B as it went down when it started to reverse, and then the C move was over when it started to slingshot back down, and now we're in the midst of a D. And you could ask our students how we're pegging this each and every day by following the cycles. Well, Gary, what if I'm an intraday trader? Well, you go to the lower time frames and you buy the little hook and cross pattern. And notice, I don't know anybody that trades futures out there, but you can risk as little as $56 to make over $1,000 by trading for one contract for 1 point and simply doing by a hook and cross pattern. And notice we went from a low down here of 142 and went to a high of 143, so just over 1.5 points from this move, and it was based on what? The time frames aligning. And why do we expect this to go a little bit higher? Notice the 4-hour starting to bottom in reverse. Very easy to see. So the bias for this 30-year move based on this 4-hour would be to what? Run your swing point low to your swing point high to swing point low and look for a Fibbo retracement. And what if it goes, it keeps going? Well, you draw a little box so you know what your targets are. And then it'll give you your numbers. And then once you reach those targets, we can continue with, well, there's another swing point up here. It expands your target. So you have plenty of targets to shoot for. All right. So this is just giving you a little brief synopsis, but again, it only takes a couple of trades in order to make a nice move in these markets by setting up the time frame. Here are these two larger trades, 31,000 and 26, 58,000 total, based on a couple of trades that we get into. And yes, this will depressurize a little bit and continue to go higher, so this number will continue to grow in the months to come. All right, let's go back to the some trading results other than the live ones I've showed you. Here's gold, in which we were talking gold prices aligned up on the higher time frame. And notice, $126 move. I don't know if you can see that at home, but that's $126 move on gold. Not small moves because we align the higher time frames. Same thing, over a $30,000 trade, gold going to the downside using the triggers and the time frame alignment. We made a $150 move on gold. And this is commonplace. This is a picture of a member's trade station in which he shows he's up over 8,600 pips on multiple time frames. Because he used the slice of heaven finder that we just showed you, he was able to continue to let those trades run and continue, and it went up to 18,311 pips due to the cycling time frames on those pairs. Here's a screenshot of that same trading station now at those same trades, but it's reflecting, if you add up all those numbers, to 18,311 pips. Here's another one on gold, again, simply showing that we had another move up based on the cycles. Here's the pound odd. This pound odd we were talking about, we're up over 2,000 pips to the upside. Well, here we're up 778 pips to the downside. Well, we didn't close it because important scenario is you need to maximize your profitability. You've probably heard that from all speakers today. Maximize your profitability. And what better way to do it than continue to follow the cycles? So yes, there's 778 pips, but we didn't close it. We let it keep running, and it went to 1,274 pips. Well, that wasn't enough. We kept letting it go, and it went to 2,270 pips. Well, we still weren't done because the time frame still aligned, said it was going to go further, and it went on to 3,627 pips. Okay, and continue. Here's the pound CAD, 3,073 pips. So you can see when you align the time frames, good things happen. Here's the pound yen, 3,215 pips. Here's another tool in our toolbox called the Breakout, pending breakout strategy. This can be used during the Forex market during Asia or during London when they have the breakout. And you set this system up, and it automatically at the end of the first hour of trading will put in a high and a low figure. Based on the current price, when that first 1 hour candle closes of that session, it'll automatically give you a high and a low. Well, I can tell the system to buy it when it breaks the high or sell it when it breaks the low. Well, Gary, that sounds great, but what if we're in a downtrend like we were in this picture? Well, not only can I set this, but I can tell it to, if it breaks the high, don't buy it because the time frame's saying it's going to go lower, and then sell it only if it breaks the low. And this went on for 272 pips on a simple breakout that took less than 15 seconds to set it up, and the rest was history. It enters the trade for you, it moves your stop loss into profit, and it'll take profits accordingly based on the scenario you enter. Now, we've seen a lot of great results, and it seems pretty simple concept to align those time frames. The time frames must be aligned, and that's what we set up automatically for you. So what we're offering today is called our Master Trader Program. It includes the Premium Edition software, which we barely touched on just a couple of the tools, and it includes our live trading classes. We average about 7 to 10 hours of live trading every week, and you have access to the archives if you're not available during that live session. We record our classes. Because we look at all time frames, you don't have to be in that class to be able to take advantage of the trade. We talk about intraday trades that would be good for that day. We talk about the time frame cycling and how you may look for this trade days later, weeks later, months later, and even the pound odd, et cetera. We've been in for months. We're going to continue to be in for months as it's going to go from 2,000 to 3,000 to 4,000, et cetera, as it stair steps. Just briefly, we're going to show this is what you get with the software. The scanner, we showed you that one. The slice of heaven finder. These two are designed so you don't miss the next big market move. The slingshot trade triggers, we showed you those, very important, and you can set the trade management system to buy, go short, go long, buy the dips in an uptrend, so every time it dips against you, ignore it, then to buy the slingshot higher, etc. So it's very intelligent. That's the trade management system we briefly showed you that has both the set it and forget it scenario where I can set it to buy a slingshot higher or buy a trigger higher, and it'll stay in the set mode until that criteria is met. So it might take a day, might take a week, or even a month before the criteria is met. Then it'll enter the trade for you at that time, depending on your entry. But as I showed you from the scanner, there are so many opportunities that are abound. They'll have more trading opportunities than you can ever trade. Every day of every week of every month, the time frames are always cycling. You're always going to have, whether it's stocks, futures, commodity, ETFs, bonds, doesn't matter the stocks, et cetera. It tells you when it should moving up. And we talked about that H4 slingshot on Amgen. It's showing that it's engaging up. So it gives you everything you need to know at a glance. Also, we have in this the Scalping Asia system and a Triple P scalping system. I didn't have time today to reflect those for you or show them to you, but it's ideal for those that just want to get in and out of the markets in a quick pace. This is ideally set up. Obviously, it's hinged on the lower time frame for scalping purposes. We also have that breakout trade management system we showed you and a bracket trade system. What's the difference in the two? You can set it a pending order to hit a resistance level to enter short, or once it breaks that resistance level, you can tell it to buy it as it breaks it. Either way, whether you bracket it out or it's the pure breakout, you have both of those at your fingertips. Top 10 reasons why we should be trading with the MPA PE3 software. It automatically calculates support and resistance levels. No more guesswork, is this support or resistance? It automatically identifies the trend of each time frame. It tells you whether it's up, it's down, is it engaging, exactly what it's doing. It automatically monitors and tracks time frame cycles. This is huge. Unbelievable that this can do this. It provides consistent entries, exits, and take profit levels based on those trade triggers, slingshots, and profit triggers. Again, just to reiterate, the trade management system, you can set it in advance until your entry criteria is met, or you can instantly go short or long based on the time frame alignment, and the system will manage it from entry to exit. It fits any trading style, whether you're a scalper, day trader, position trader, investment trader. Dual scanner, scan the markets for the next big trade. It works on over 800 plus symbols, including stocks, forex, futures, ETFs, commodities, etc. And it consistently delivers low risk, high reward, high probability trades. Again, all that is automated for your viewing pleasure and convenience. Now, we decided to give you a very special offer today for those of you attending today's webinar. We're going to offer the MPA PE3 Master Trader Annual Program. In the past, we've offered this on our website pricing. If you go there now, you'll see this is the same pricing we're offering on our website. $4,997 for a year, access to the software and the live trading classes. And in the past, we've offered a special previous bonus special for $3,564. Again, the software plus the classes. Well, today, we're going to offer a special price of $2,497. That includes the software and the trade alerts that come with our live classes, etc. And if you're one of the first 50 people, you'll click on this link. So please post the link for us. And for the first 50 people, we get an added bonus that you'll receive 24 months of the software and classes for the one low price of $2,497. Well, if you were to amateurize that over the 24-month period, you're talking $100 for this high-tech, state-of-the-art software and our 7 to 10 hours a week of live trading class. That's more than most services charge just for one, much less get both of these for 2 years. So we like to pay it forward because our members are successful and they've been with us year after year after year. I want to thank you for attending today's webinar. We look forward to you joining us. Remember, why the MPA software, the Market Price Anticipator software, earns its name. It empowers you to read and anticipate price in any financial market, on time, in time, all the time. If you have any questions, please send support@gpatrading.com and we'll gladly answer any questions you have. Also, we're very proud of our Educating the World. We have 121 countries and counting and thousands of members across the globe that have been utilizing this system. And we welcome you to join us today. So I'll go back to the screen with the link on it. Again, it's www.gpatrading.com/a-member/sign-up/annual2497. And it has been posted for your viewing pleasure. So I'll leave you with this as I have just a few more minutes. If you're going to trade stocks, futures, commodities, ETFs, bonds, how do you know price is going to reverse? You need a gauge. Pilots don't fly airplanes without gauges. Options traders say they don't need indicators because you just do options. Well, it helps to know when the option is going to go up in price or go down in price. And all you have to do is utilize the software when it aligns those time frames automatically for you. And we should never trade blindly without having some sort of gauge to tell you what direction prices are going to be moving. So look for 30-year bonds. I'll close with this. It's going to climb a little bit higher, but it's going to continue to stair step lower and lower and lower as we start to slingshot lower in the coming weeks, right? We called this slingshot here as it was rallying. I called this the slingshot lower weeks in advance. And I suspect we're going to see the monthly do the same in the coming months like we did previously. And that's why we're going to stair step our way towards this 126 target. And it's probably a year or so out. And it also is in tune with the Fed raising interest rates. The more they raise interest rates, the faster this will make its destination towards this 126 level. So whether you trade Forex futures, bonds, ETFs, you name it, it's all available, including the hot topics of Bitcoin, and we also have Ethereum. And Ethereum was another one I mentioned that was going to reverse. Those of you just a few days ago, I said look for this to reverse and make a move toward the 758 target. It started out when we gave that alert back here when it was down at 361, and it's almost doubled in price, headed toward its 758 target. And as long as this weekly stays up, there's no other way it's going to do but keep stair stepping towards that target. The only way it doesn't reach that target is for this weekly right here to turn back over. And you would know that based on the behavior of the daily. So what's projected in the coming days is the daily to slingshot higher and higher as Ethereum continues to move towards 758 target. So again, with that, I want to thank Tanya and Traders Talk Live for today's opportunity. We appreciate you taking the time to visit with us today, and we look forward to you joining us in the future. Take care and God bless you.